Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. We have seen a violent correction for Bitcoin following the President Donald Trump tariff announcements, resulting in a near 7% drop in the market value of Bitcoin in the matter of 2 hours, resulting in over $500 million in liquidations over the past 24 hours alone. We have definitely seen a dramatic shift in sentiment and direction here on the short term. We are going to be discussing the consequence of this short term move, how this impacts the macro charts, going over key macro levels, technical levels, and potential targets, as well as going over the total market cap and even discussing the total altcoin market cap as we are currently dropping below the 50 EMA. If this is the kind of content you are interested in, guys, this is the channel to be on. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, no coin chilling, nothing but pure raw TA. If that is the kind of content you love to hear, you can also join us on Telegram. That is the first link down below. You'll get access to updates, charts, economic news, daily videos, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in taking your trading to the next level, you can join us in the VIP channel. We have over 700 members. We post trading setups with exact entries, targets, stop losses, and trade justification, including access to a multitude of different group chats, from the general chat to the trading chart and education tab, to the daily video, the help, the news, and the community setup chats. If you were interested in joining all of that, go ahead and contact me in the pinned comment by clicking the admin contact link or clicking these links below to find a 51 plus month trading track record, as well as a 10-minute video showing you inside the channel. Let's go ahead and jump on in. So taking a very brief look at the short-term price action, we can see, guys, a violent move over here for Bitcoin, resulting in now over a 7% pullback since that high retest just shy of 89,000. If we take a look at that liquidation data, we can see over $500 million in liquidations, with a very large majority of that coming within the last 4 hours alone. So some intense volatility. And this horizontal region we are currently sitting within is going to be of utmost significance in determining where that macro direction for Bitcoin is going to continue, and thus for the rest of the market, something we'll be discussing in the video today. As we mentioned, we're not only going to be talking about this recent pullback, but of course the higher time frame charts and the broader short-term charts as well, going over key targets, potential rejection points, potential reversal points, and worst and best case scenarios. Let's move over to our economic news and DXY and S&P 500. Starting on the economic news, guys, we do have some major news events actually coming up. Of course, on the 10th of April, we've got our CPI data, and more near, we do have, of course, our NFP data and unemployment rate data coming out tomorrow. This is going to be in around 36 hours time, and we do have the Federal Reserve Chair speech that is going to be around 3 hours after the NFP data. So in the next 48 hours, we're going to have a few news events popping up, which may massively sway the direction of the markets, something we do have to keep in mind. Looking at the DXY, again, not really that much happening. We have seen some fluctuations based on the recent tariff news, but more and more, we are still watching the 50 EMA and the 200 moving average as triggers for directional continuations down or up. Until then, expecting compression between these levels for an unknown period of time. Again, the DXY is going to be heavily reliant on developing economic news to move, so we need to keep more of an eye on the upcoming news and the result of those news and the narratives that can form as a consequence of those news releases, more so than the actual chart itself over here. Looking at the S&P 500, it is moving as expected. Nothing over here seems too unexpected. In fact, the price is moving towards our target, which is sitting at that 5,300 level. We have said for many weeks now the S&P 500 is bearish. If you've been following the channel, you would know that we have been out of the market ever since around mid-December, turning bearish on the S&P 500 right over here. And again, the reason we did that was two things. We had strong bearish divergences developing, but we saw a sentiment shift, a overall narrative shift for future interest rates potentially moving from 5 to 2 reductions, and that was a leading indicator for potential future de-risking as a consequence of the market being future seen. So we have seen the market drop into a phase of uncertainty, and now we are dropping into a phase of, I guess, what you could potentially call despair, and where we are seeing these larger corrections, or the risk, at least the risk of these larger corrections developing. We're moving into this phase where we really need to see the market turn around, otherwise we do run the risk of these steeper and more violent movements. Looking at the S&P 500 from a structural and technical perspective, to put very, very simply, while we are sitting underneath our prior level of support, this is a prior support right over here, turned into a current resistance. Below this region, we are expecting continuations into 5,300. Very simple, okay? That is the expectation we have had, and we remain to that expectation. For us to eradicate this move and to become bullish, we need a weekly candle close above this level. Of course, on the short term, we can watch the smaller time frame for potential points of reversals, which may result in those movements. But until we're looking at a higher time frame breakout of 5,800, we are going to be more pessimistic here than optimistic. Again, if we do reach these lower levels of support, this is going to be a potential major reversal point for the S&P 500, and if we lose that level, we run the risk of an even steeper correction. Now, this is worst case scenario, of course. At the moment, this is not I guess, an expected directional move for the S&P. At the moment, we are still watching the price travel between that prior resistance and current support, but moving in that downward trajectory at the moment towards that level of support. So all in all, not looking fantastic. We need to watch momentum if the RSI breaks up, and when that occurs, we are going to be flipping bullish, provided the price is above 5.8, and we'll be expecting continuations. Until then, staying out, staying patient, staying calm. Moving to Bitcoin, guys, let's go ahead and jump into it. Like we said, we have so much to be taking a look at, but let's start off by saying if you were interested in joining the exchange links down below, you'll get a lifetime trading fee discount of 15 to 45%. That discount, of course, is going to be absolutely game-changing in your trading journey. You can sign up to the links down below to BitGet, BitUnix, or BingX using those links. And of course, you'll support me making this content. And most importantly, you'll support yourself by gaining access to that trading fee discount. You can find out more information in the video we'll play. We'll see you back in the video in just a second. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, MegaWhale team, let's jump straight back into it, and we're going to start on the higher time frame charts. We're going to start on the total market cap, and we're going to start on the total altcoin market cap, and then we're going to bring it back to Bitcoin, and then we're going to finish up on that short term again. So we'll kind of jump between the time frames over here. Let's first and foremost start on the total market cap. Now, as we know, Bitcoin takes up around 62% of the market share at the moment. Bitcoin dominance has been rising for around 2 years now. So we know that Bitcoin is going to be, again, the main driver of the total market cap valuation over here. So if Bitcoin drops dramatically, we will likely see the total market cap drop dramatically. Now, with that being said, we can utilize this chart as a chart of confluence with our key levels on the macro chart for Bitcoin to confirm overall directional moves. Now, the total market cap is not going to be a great indication for exactly how the price is going to move, but it is going to be a pretty decent indication for the directions of which those movements will occur in. So not so much how the price will move, but more so where the price will move in direction. So when we're looking at something like this, we can see some key levels. We have got our 42.60 on the RSI. As you would know, this horizontal level of support on the RSI is very similar to that of which we see on Bitcoin's chart. And that is because, number one, as we know, Bitcoin is the market share, it takes up the market share. But number two, we have seen a bull market essentially since that January 2023 period, okay? We have seen the price action break through that level on the RSI and sustain above that level on the RSI now numerous times, every single time bouncing from that region, resulting in the next leg up in that bull market. However, what we are seeing now is we're running the risk of a correction underneath that 42.60. And what we can see here on the smaller time frame, and the reason I'm bringing this chart up today is because we're dropping back underneath the 50 EMA. Now we know that a loss of the 50 EMA on the weekly is going to be the trigger for the loss of the 42.60. And we know for us to lose 42.60, Bitcoin will need to continue downwards. So we can see how we have that connection there, and we can use this as a bit of a leading indicator for the direction of Bitcoin's price action. So until we have seen the break of 42.60 and until we have seen the break of this uptrend, there is always going to be the chance we reverse, right? Because this is technically a level of support, and support is support until it is not. But it's more about becoming aware of the potential consequences of a loss of this level. It is not about per se, being correct. The market and trading isn't about being correct. It's about making profit, it's about making money. So it's more about creating these plans and being aware of the potential opportunities these plans can provide if they justify and if they confirm. In this instance, if we see the break of the 42.60 and we see the break of this uptrend, we are expecting a correction into the 200. Now that 200 moving average would line up with the sell side liquidity. If we look at the Bitcoin chart, that takes us right into this region over here. So we can use the total market cap to cross-check and use it as confluence to validate levels on the Bitcoin chart over here. So that is what we're watching for the total market cap. It is not looking amazing, but we do still have hope while we remain above the 42.60 and the uptrend. As for the altcoin market, we are sitting in a similar position. We do not have a critical uptrending level, but again, we can see the price action is dropping below currently that 50 EMA. We do have 4 days remaining on the weekly, and if we do not sustain above the 50 EMA, and we lose that level on the RSI, we could see quite a violent correction for altcoins into, I would say, around 650 billion, which is our prior change of character level. So there is a steeper correction looming here for the altcoin market if we do not bounce here within the next 4 days. So we've talked a lot about having to bounce here. We've talked now a fair bit about why we need to really reverse immediately, not from the perspective of both the total market cap and from the altcoin market, but even in perspective to the S&P 500. So let's talk about what we need to do to actually bounce here, where we need to bounce from, and what are the levels that if we lose, well, we enter these higher time frame downtrends. So let's talk about the short term, and then we'll jump over to the higher time frame. Looking at Bitcoin, we have seen a lot of volatility. As we mentioned at the start of the video, $500 million in liquidations is no small amount, particularly in a 2-hour time frame. It is definitely pretty intense. We just saw Bitcoin break out of that 4-hourly downtrend in the RSI, indicating a positive momentum shift, resulting in a rally into 48,000, our first target, a rally into 46.3, our second target, and actually going a lot higher here into that prior level of high resistance at 89,000. As you know, the 89,000 resistance, guys, is a daily level of resistance, which essentially was a level of support for around 2.5 months prior to us breaking down, and we have now retested it once. We have now retested it as resistance twice, rejecting from it 2 times over the course of around 2 to 3 weeks. So this level is a level of absolute significance, which we need to break above to actually flip this chart bullish. Until we break above 89,000, we are still technically bearish on Bitcoin. The chart is looking weak. So going back to that short-term chart over here, we can see our annotations. Above 89,000 is bullish. Below 80,000, we see a larger correction, and 80,000 to 81.5k is going to be a level of support. So this chart right here, this short-term chart, what happens between this range is more or less irrelevant, but what happens as a consequence of a break or a loss of these lows or highs is going to spill over into the charts we just showed you, the altcoin market, and of course the total market cap. If we want to see the total market cap bounce, or we want to see it correct, or we want to see the total altcoin market cap bounce or correct, it is going to be determined by what happens here on this chart, specifically what happens to the 89,000 resistance and that 80,000 support. So this chart here is literally the most important chart, not only for the short term, but for the macro, as the consequential break of the lows and the highs not only have short-term implications, but macro implications as well. So let's talk about that now. If we were to break above 89,000, what would happen? If we were to break below 80,000, what would happen? Let's go to this chart to talk about that. First and foremost, let's talk about the break above 89,000. Let's talk about the bullish case scenario. As we can see historically here, guys, we have seen a few patterns play out respective to the RSI. Ever since we entered the bull market right over here, January 2023, we have been obviously trending upwards, but we have had periods of mass consolidation. We have a 8-month period of horizontal consolidation here. We have about an 8.5-month period of horizontal consolidation, downward consolidation over here. This is a descending channel formation. This is a horizontal channel formation, okay? In both of these instances, we can see the lowest point retested lined up with the 44.62 in both instances, okay? And then upon the breakout of the downtrend of the RSI, we saw a positive momentum shift, which then propelled Bitcoin into this extension move upwards, the next leg in the bull market following mass consolidation. Remember, mass consolidation leads to mass expansion. If we are looking at the price action here, we can see a similar pattern in regards to momentum, where we have this downtrending momentum against a 44.62 before a potential reactionary move. However, the difference this time is we do not see a bullish consolidation structure. In this instance, we had the neutral structure. When we break into a horizontal channel from the direction in which we break in, it's generally the direction we exit. When we have descending channel structures, we generally see the price action follow through as it is a bearish exhaustion structure where we see absorption. But when we're looking at the price structure here, we don't have any clear structure. This is a negative for this. This could indicate that we are seeing exhaustion spill over to the higher time frame, which could result in directional continuations downwards. However, that is but a theory until we get confirmation. So what needs to happen for Bitcoin to follow suit with what we saw in the prior to expansionary moves? Number one, we need to see the weekly RSI break upwards. So we need to have a weekly close above the RSI. For that to occur, we need to break the weekly downtrend and we need to break above 89,000 on the weekly. So we need a weekly close essentially above 89,000 for us to then expect a continuation upward. Simple as that. Here is the kicker. If we don't get that, and what we see instead is a breakdown of 80,000, we are going to lose the low, the 44.62, and as a consequence of that, we will lose the 50 EMA, and we'll be on our direction into that $55,000 region. Will we go all the way down? Maybe, maybe not, but we'll be continuing in that trajectory. And that is the key point. We're continuing in that trajectory as the total market cap will be breaking down and the total altcoin market cap will be continuing down through that RSI level. So that is why these charts are important. That is why the short-term chart is of absolute significance. And that is why the macro implications are something we need to be completely aware of and should not be blinding ourselves to either opportunity and scenario. Let's go over to the short term and wrap up the video. As we can see, followed by mass liquidations, we do generally see mean reversion. So what do I mean by that? After we have seen this huge flush toward the downside, it is more likely from a statistical point of view that we are going to see some sort of continuation upward here. We're going to see some sort of mean reversion upwards to flush out late short. So remember, we dropped like 7%, okay? So That doesn't mean that if we push up into 84,000, we are going to go to 89,000. That's not how it works. That it is likely we are going to see some sort of flush toward the upside to flush out late shorts before we see the true direction of this price action continue. But I really want to hone in on this concept. It doesn't matter where the price action moves if the price action is moving within a horizontal range, okay? Any particular price point within this range is no more significant than any other particular price point, whether it be 87,000 or 84,000 or 83,000. None of these levels hold any real significance. The only point of significance is going to be the break or the loss of our key levels of liquidity on the range low or the range high. Any sort of fluctuation between these levels should be considered completely normal fluctuation, and any of the fluctuations between these levels will have zero macro implications. That is what is important. If you're looking at the higher time frame charts, you need to be looking at what levels have implications on the higher time frame, and only the 89 and that 80,000 level does. If you are trading the short term, by all means, there are plenty of important short term levels scattered throughout here. But if we're looking at the implications on the higher time frame chart, you should not get caught up with this short-term chop and volatility, because that is all it is. It is short-term chop and volatility. You need to be watching at what point do we actually see this consolidation, which it is a consolidation now, show us relative strength to the point at which we are expecting to continue higher. At what point will we see exhaustion take hold and result the price action continue lower? And the answer of that is 80 and 89. Thanks for tuning in, guys. Have a fantastic day. Catch you guys in the next videos tomorrow. See you then.